A drop in inflation lifts hope for an end to the interest rate cycle. House prices regain half of their losses from last year. And an Aussie company is caught in the middle of an insider trading allegation against the UK billionaire owner of the Tottenham Hotspurs. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Thursday, the 27th of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
That third story, that sounds like it's got everything.
Well, it has. I mean, to be honest, I'm a Tottenham Hotspur fan. I'm not a big football fan anyway, but if I was going to get it for anyone, it's certainly the Spurs. And of course, they've got their new coaches in Australia, and so plenty to think about that one.
Yeah, and links to an Aussie company and all of this. I'm looking forward to that story. We'll get to that a little bit later on. Something else we'll get to later after the show, in fact, is your interview today with Rich Newsom, the Executive Director, Investments and Global Chief Investment Strategist at Giant Mercer.
Yes, Rich is in the country at the moment, normally New York based, a good friend of ours here at Fear and Greed, and we talked to him about the outlook for investing in the global economy. He's actually quite upbeat, and he says, the three things that he was worried about 12 months ago, he's still worried about now: inflation, Ukraine, and China, but he's not quite as worried as he was. So it's a great chat.
Yeah, it is really interesting. It's worth a listen. It's coming up a little bit later on. The main story this morning, Sean, the Reserve Bank is under pressure to not lift interest rates next week after June quarter inflation came in below expectations, reflecting the slowing economy.
The Consumer Price Index rose 0.8% in the June quarter, the smallest rise since the September quarter 2021. And for the 12 months to the end of June, inflation was 6%. That's down from 7% 3 months earlier, according to the Bureau of Statistics. Both figures, the quarterly and the annual rates, were below expectations. Inflation peaked close to 8% late last year, and it's clear that price rises are slowing. But we still have a very strong employment market, which does put pressure on wages and prices. The underlying measures of inflation, the ones that take out volatile items, were down as well. In fact, if you take the trimmed mean measure, which is the one the Reserve Bank likes, the quarterly rate of inflation was 0.9%. Annualise that. So multiply it by 4, you have an inflation rate of 3.6%. That's actually not too far off target. Federal Treasurer Jim Chalmers welcomed the data, but he did add that while inflation's heading in the right direction, there's still a long way to go.
I enormously appreciate the fact that you explained how to annualize a quarterly rate for me, because sometimes I just really need to be stepped through it. And thank you.
That's all right. Are you serious when you say that?
Yeah. I genuinely am, because suddenly you kind of hear, the annualized one. Like, is it as logical as just times it by 4, or is it weighted differently for different quarters? That kind of thing. And so when you actually say, no, it is as simple as multiplying it by 4, that every quarter is treated equally. Okay.
Yeah. I like it. I mean, mostly economics just uses a bunch of jargon and words that no one understands so that everything isn't as it seems. But in this case, it is.
It actually is. Well, there we go. Sean, the big question now is what's going to happen next week to rates when the Reserve Bank board meets. Are we going to see a 13th rate rise in 15 months?
Difficult question to answer. The Reserve Bank says it's looking at the data. Since the last meeting, we've had stronger than expected labour force figures and weaker than expected inflation figures. The latter, inflation, is probably more important, and financial markets on balance think there won't be a rate rise next Tuesday. Market economists aren't so sure. There's a real divergence of views. As AMP Shane Oliver put it, yesterday's data should be... Oh, sorry, I said data, Michael. It should be data, shouldn't it?
Oh, yes, it is. This came after last week when we had the big data v data debate, and we had listeners joining in, and the I think the consensus was, there's no consensus on interest rates, but there was consensus, you are wrong, and it is data.
Yeah, that consensus came from you. Anyway, Shane Oliver, AMP Shane Oliver, chief economist, he said the data should be enough to see the Reserve Bank remain on hold next week, but it's a very close call, and the central bank is still likely to be concerned about underlying inflation. I suppose to wrap all that up, market economists now think there is still one more rate rise in the future at some time. That's kind of as close to consensus as you'll see, but it may not be on Tuesday.
Okay. How did local markets respond to the inflation data?
They liked it. In fact, they loved it, Michael. The S&P ASX 200 jumped sharply after the 11:30 a.m. announcement. It finished the day up nearly 1% to 7,402 points, and that's a 5-month high. The big miners led the way with BHP and Fortescue Metals both up more than 2%. Tech stocks, consumer, discretionary and financials all did well, while utilities, healthcare and real estate investment trusts underperformed. Broadly, I do say this advisedly, broadly, the stocks that do better when the economy is doing well outperformed and the safer stocks underperformed. I think that's how you'd characterise it. All the big banks did pretty well. So too did WiseTech Global and REA. Among the laggards were Goodman Group, CSL and Telstra. Michael, we're coming into reporting season. I know you love reporting season.
I do. I actually do. There's always so much news.
Yes, there is so much news and it really has kicked off. So we're just going to kind of do briefs of the corporate news because there is so much going on. Yesterday, Mineral Resources said it's failed to hit guidance on lithium exports from one of its big West Australian mines. Kogan.com, the retailer, says its inventory has been slashed by nearly 60%. It's been a real problem for them, but sales tumbled over 22% during the second half. Profits were also lower. That's thanks to inflationary pressures and higher rates. Online marketplace Freelancer broke even for the June half. Good news there. But it did come on a 7% drop in net revenue. Founder and Chief Executive Matt Barry always has something to say, Matt. He said artificial intelligence is poised to transform the way millions of unskilled workers operate. Oil and gas group Beach Energy said production was up 12% last quarter. That triggered a 6% jump in its share price. And corporate travel management upped its earnings forecast. It sent its share price up nearly 1%. It's seeing particularly strong growth in Europe, while Asia remains on track to beat 2019, which of course was the last pre-COVID year.
That is some short and sharp corporate news, Sean.
Plenty in it, Michael.
You will now be known as Sean Short and Sharp Aylmer.
Don't think I could be ever called short and sharp, to be honest.
We'll leave that one alone. What's happening in international markets?
Well, the International Monetary Fund has warned that China's stuttering economy poses one of the main risks to global growth. The international agency, in its latest World Outlook update, expects global growth to slow to 3% this year and next from 3.5% in 2022. While the actual number is actually a slight upgrade, it's still really weak by historical standards. Meanwhile, on Wall Street, Microsoft reported record sales and profits and said it's starting to see the benefits of its investments in generative artificial intelligence. The company made $20 billion during the June quarter, or a little less than 30 billion Aussie dollars, which is about, it's a little less, but nearly the same as what the big four Aussie banks will make for the full year combined.
That is extraordinary, isn't it? When you put it like that, that is amazing.
A sense of how big Microsoft is. And Alphabet, parent of Google, its results were reasonably solid. Ad revenue was up 3% compared to the previous June quarter. Google made about $18 billion for the quarter. Now, it's another really big player in the AI market. And there was talk after the investor conference of just how much Google is going to tip into AI, certainly be measured in the billions of dollars, possibly the tens of billions of dollars. Mind you, when you're making that $18 billion for a quarter, it's all relative. And before we leave the international scene, commodity prices are on a bit of a run at the moment following Beijing's pledges to support the Chinese property sector. The property sector in China is a big buyer of commodities, so copper, zinc, nickel, iron ore prices, they've all rallied.
Goodness me, there is a lot going on. We'll be back in a moment with the rest of the day's business news. Sean, the Australian housing market looks to have fully recovered momentum with the highest price rises across the capital cities last quarter since late 2021, and unit prices increased for the first time in over a year.
During the last quarter, combined capital city house prices recouped almost half the value lost in the 2022 downturn. So across the board, houses fell by around $60,000 last year, obviously depended on what city, but across the board, the median was about $60,000. They've now recouped about $34,000 of that value. Sydney is leading the charge. Canberra is the laggard, with prices not moving in the nation's capital, according to the Domain June 2023 house price report. In the unit market, prices rose over the quarter in Sydney, Melbourne, Brisbane and Adelaide. Darwin was steady, but there were falls in Canberra, Perth and Hobart. The mismatch of supply and demand is the main reason for the turnaround. While there's rising demand, the total number of homes for sale is 22% below the 5-year average. Bottom line to this story is there's no doubt there is momentum in price rises in the housing market.
Sean, mining giant Rio Tinto last night announced a 34% fall in profit on the back of lower commodity prices, with the net profit of $5.1 billion below expectations.
Yes, the disappointing result included an $800 million impairment against its alumina refineries, which in part is due to the federal government's new carbon policy here in Australia. Rio will pay out $1.77 a share interim dividend, which is below the past 2 years. Mind you, they were great years. So this dividend payout this time round will actually be Rio's third largest half-year dividend. Iron ore again dominated the result, with the division lifting volumes by 8%, even as prices came off. Other divisions suffered from a 25% drop in the price of aluminium and a 12% fall in the price of copper. The announcement was made after the ASX closed yesterday. During the day, Rio's share price was up 1.5%. It'll be interesting to see what happens in the next few hours.
Gold digger Perseus has a pretty tricky dilemma, Sean. How to spend more than $800 million in cash?
I have some ideas.
You got a few? I could chip in a couple as well. And most of them see a fair bit of that money funneled towards me.
Yeah. Yeah, no, I'm a bit along the same way. Maybe combined, yeah.
Okay, well, what does Perseus think they should do?
Oh, well, they may well pay out a special dividend or something next month. They've beaten full-year production targets and doubled their cash reserves for the 2023 fiscal year. The main reason for the extra cash is the decision to defer spending money on a new mine in war-torn Sudan, according to a report in the Financial Review. Perseus is the fourth largest gold miner on the ASX, and production at its 3 mines in Ghana and Cote d'Ivoire beat the company's forecast. Now, that came as the price of gold rose up about 7% over the year. So it has all this money, $552 million in cash, about 820 Aussie. But it doesn't really want to. What the plan was to put the bulk of it into Sudan, but it doesn't want to do that anymore. Now, boss Jeff Quartermain hasn't given up on Sudan totally. He said it could be a very different place in a few years' time. But if that's a few years' time, they're going to do something with the money in the meantime.
Hey, Sean, I've got to tell you something that happened to me a couple of nights ago. You know how I learn from you as we go through this podcast.
I know how you say that you learn from me, yes.
Well, I was appearing at a book club the other night. The book club had gathered to discuss my book.
Did you write a book, did you?
Yeah, funnily enough, it is a novel. It's available wherever you buy books. It is called How to Be Remembered. Anyway, look, that's all irrelevant, Sean, and we shouldn't dwell on that.
We did get
much.
it in. Yeah.
Yeah, we managed to squeeze it in there. But do you know, at some point, about a third of the way into the book club meeting, all of a sudden, I started showing off all of my knowledge that I had learned from you. I started talking about stocks going ex-dividend, and I started talking about the difference between hard commodities and soft commodities. It has no relevance. We were sitting in the middle of a library. There was about 30 ladies all sitting around, and here I am showing off all of my economics knowledge and all of my corporate news information that I had learned from you, and not once did I credit you for providing me with all that information.
But you think that all the stuff I know is because of my mind? Hardly. I do not think so.
I wanted to say thank you, and I wanted to say that that clearly, like when you were talking about special potential for special dividends through there, I'm like, taking notes for my next book club meeting. How to Be Remembered is the name of the book, by the way. Moving on, Sean, shipbuilder Austal's share price.
Shameless. Yes.
It is a little shameless, isn't it? Austal, the share price fell 11% yesterday after it said a big cost blowout associated with a US Navy contract could push the company into a loss.
So there have been cost increases around towing, salvage and rescue ships. It means the company, which had expected to make close to $60 million for the last financial year, may even end up in the red. Austal Chief Executive Paddy Gregg said it was clearly a disappointing financial result and blamed inflation and inaccurate assumptions. Austal's share price almost doubled in the 6 weeks to the middle of July on the back of excitement around the AUKUS deal, but a chunk of that was clearly lost yesterday. I don't know whether you remember a few days ago, Austal management stood alongside the US and Australian Navy bosses and politicians celebrating the commissioning of USS Canberra. Not quite so happy yesterday.
Yeah, maybe not. Sean, in New South Wales, the Premier Chris Minns has again refused to rule out scrapping or delaying the $25 billion Metro West project.
Yes, big deal in that state because it's not just the project itself, but of course it's the corridor that it's supposed to run, and businesses housing, all that sort of thing along that corridor. The Underground Rail line was supposed to cost $16 billion. Looks like it is at least $25 billion. It may actually be $28 billion, i.e. the $12 billion blowout. And Min says there's an independent review underway because of the size of the overrun. The Metro West theoretically will connect Parramatta in the Sydney's west to the CBD via an underground rail line. It will reduce the commute from Parramatta to the city from 1 hour to 20 minutes. Parramatta and West is a growth area of that city. So a very, very big project, but it looks like it's slightly problematic at this point. How about we say that?
That's probably a good way to put it. All right, turning to international news now, and a major United Nations report has recommended smartphones be banned from schools to help stop classroom disruption.
So UNESCO, which is the educational, scientific and cultural wing of the US, says the ban will improve learning and help protect children from online bullying. Excessive mobile phone use is associated with poor educational performance, and screen time worsens children's emotional stability. The Guardian newspaper reported, citing the agency's research, digital technology as a whole, including artificial intelligence, should never take precedence over a human-centred vision of education or replace face-to-face interaction teaching, the report adds. It says, and I quote, "Not all change constitutes progress. Just because something can be done doesn't mean it should be done," end quote. The report also calls for policymakers to take heed of the social dimension of education.
Sean, for weeks there's been rumours about the fate of the Chinese foreign minister who has not been seen in public for a month. Now he's been sacked.
Yes, Qin Deng has been replaced by his predecessor Huang Yi. The Chinese government did not give an explanation for the removal of the 57-year-old Qing just 7 months into the job. Speculation around his absence ranges from health issues to a power struggle or an affair. There's been media speculation of something more sinister. In a senior leadership shake-up announced on Tuesday night, Beijing also replaced the head of the central bank with the deputy of the bank. There are also changes to criminal laws to strengthen the punishment for bribery and corruption.
Wow. All right. Joe Lewis, Sean, I mentioned this at the top of the show, the billionaire real estate investor and owner of Tottenham Hotspur Football Club, has been charged over multiple alleged instances of insider trading by US prosecutors.
The 86-year-old, who is one of Britain's richest men, is accused of tipping off employees, associates, friends and romantic interests with non-public information about various entities and lending some of them hundreds of thousands of dollars to trade on the privileged knowledge. According to the indictment that was unsealed on Tuesday, Lewis and his associates were collectively able to make millions of dollars using the stolen information, which included favourable results from clinical trials. Now, Lewis is alleged to have shared information about publicly traded companies, including the Australian Agricultural Company, AACO, as it's known. It's listed here on the ASX. The claim is that a director of AACO leaked board conversations about the impact of the Queensland floods to Lewis. Lewis, whose personal company owns about 50% of AACO, then allegedly passed on the information to one of his pilots and said that they should trade as soon as possible. If so, that is a big, big no-no. This is a very, very rich man, very well-known person in the UK, owner of a large agribusiness here. So who knows where this one goes, Michael?
Yeah, it is a fascinating story, that one. All right, up next is the Fear and Greed Daily interview. And Sean, you're speaking with Rich Newsom, the Executive Director Investments. And I love this title, Global Chief Investment Strategist at Mercer, an investment giant. It is a big one.
It sure is. Rich tells us all about what he thinks is going on in global markets and particularly around the economy and the Ukraine and things like that. It's a great chat.
Yes, coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au.
Now, Michael, we haven't really given a Mia Award away for a while.
I was just thinking that.
And I'd just like to have a bit of a shout out for Rainer R., I'll call him. Rainer and I worked together many years ago, a very, very good man, and haven't been in touch for a while. He said, "Hi, mate. Hope you've been well. I love the podcast. Have been a daily listener from almost day one. Congrats on the huge success." He then gives a recommendation for another podcast, and he said, you should think about talking to the guy on that podcast. Anyway, if you don't like the suggestion, all good, but I thought I'd share it with you. If you do interview him, can I get a Mia Award? Now, shameless asking, Rainer, but absolutely you can.
Absolutely. I mean, Mia is our most enthusiastic advocate. It is someone who goes out there and kind of spooks fear and greed and tells their friends and colleagues that they're listening. And Mia, I mean, that's a no-brainer. Absolutely.
Yep, absolutely. Go Rainer.
Yeah, well played. All right. Thank you very much, Sean.
Thanks, Michael.
It's Thursday, the 27th of July, 2023. Make sure you're following the podcast and join us on LinkedIn, Instagram, X. I don't know. It's going to take me a while to get used to saying that. X instead of Twitter, Threads and Facebook. I'm Michael Thompson, and that was the Fear and Greed Business News. Have a great day.